I have 1 o'clock, so I think we'll go ahead and get started here. Good afternoon. This is Jessica Crejo with the Iowa Coalition for Integration and Employment and a member of the Iowa Employment First Leadership Team. Welcome to the Iowa Community of Practice for August 2021. Really excited today to wrap up our benefits planning summer session, saving the absolute best for last, both in content and presenter, if I may say. Before we get started with that, I just want to remind you that I'm recording today. We'll be sure to share that recording along with any materials and the presentation, sending that along to the mailing list afterwards. If you have any questions, please share those in the chat. Let us know. I'll be sure to share those with Brian, or Brian will field those. It's up to you if you turn your camera on, but please stay muted while Brian presents to avoid any audio issues. And I think without further ado, I would like to introduce you to Brian Dennis, right? Workforce Disability Services Program Coordinator, Ticket to Work Coordinator, Benefits Aficionado, Jack of all trades, expert in all. So Brian Dennis, Brian Dennis, thanks so much for joining us today and for wrapping up the summer benefits planning series on subsidies and special conditions. Take it away.
Absolutely. So I think the saying is, what is it? Jack of all trades, master of none. So you definitely oversold. But thank you, Jess. Thank you, everyone, for attending. And yeah, so thank you for letting me be the one that closes us out. So yeah, so again, my name is Brian Dennis. In my current position, I am the Workforce Program Coordinator for Disability Services at Iowa Workforce Development. And there are a lot of parts to that job, but one of the big ones and one of my favorite ones is helping individuals who access the workforce centers all across the state that have questions about benefits, really help them understand and navigate those waters. So we have various benefit planners in various stages of training across the state in our workforce development centers, and then I am always a key point of contact. My information is at the end of the slides. So if you have individuals who have questions about benefits, ticket to work, moving to employment, training, all those things, there's so many things underneath the workforce umbrella that we would love to partner with. So feel free to always, you can always give me a call or send me an email. And if I'm not the correct person, I will help you find the correct person. So with that being said, I want to honor everyone's time and go ahead and get started and talk about one of my favorite benefits, work incentives, is special conditions and subsidies. So let's jump right into this. And this is one of the things I almost start every training on when it comes to benefits, is this image that Social Security is not all knowing. So I'm sure that's not a shock to anyone who's tried to navigate the waters with Social Security, which can oftentimes be really convoluted, and you can get a lot of mixed messages. I like to say that Social Security has a really big butt. And what I mean by that is, for almost everything that you've learned as part of this series, there's going to be most likely a weird, obscure rule. So one of the things that you always want to do is, probably before you even contact Social Security, is reach out to a benefits planner. I'm not saying avoid Social Security by any stretch. Those folks work really hard and they serve millions of people. Oftentimes, a benefits planner can maybe answer your question or help you drill down to a way to approach Social Security to really try and get some traction, getting a question answered or getting something done, like establishing a subsidy or a special condition. So again, I'm sure everyone already knows this, but I think it's just part of really explaining how these different incentives works, is that under the disability umbrella, Social Security has a couple of programs that are based on having a disability. So one is Social Security Disability Insurance, or SSDI, and the other is Supplemental Security Income, or SSI. And folks can obviously be on both, or if you didn't know that, folks can be on both benefits. And those folks are called concurrent beneficiaries. So while I definitely want to get to subsidies and special conditions, and again, I know this is the fourth session of the series, I also just want to make sure everyone knows the difference between the programs, because that helps make a lot of what I'm going to talk about today make sense. So the Title II benefit, or the Social Security Disability Insurance Program, is based on someone having insured status, and that is the person has acquired enough work credits over time to generate a benefit check. So you can draw off of your own work record, you can draw off of a parent, and you can draw off of a deceased spouse. SSDI comes on the 3rd of the month for most people. Some people get it on a certain Wednesday, and this is really important. When you're working and you're on the disability benefit, Social Security counts the money when it is earned. And what that means is they count the money when you actually were working to determine the month that money was actually accrued in. So I'll give you a real quick example is I got paid last week, and that pay stub, those pay periods, which are what matters when you're on disability, part of those pay periods fell in the month of July. Some of those pay periods fell in the month of August. So some of that money, if I was on disability, Social Security would say is July money. Some of it Social Security would say is August money based on the pay period. On SSI, it's a lot cleaner. It is how many times did you get paid in a month, and whether you get paid once, twice, 20 times. How are all the pay stuff that come in the month of August? That is all August money or September money, so on and so forth. So the reason that this matters is when we talk about subsidies is really trying to understand how much money is the person earning, because that is going to be vital to understanding if a special condition or a subsidy will actually be beneficial to the person. So just a couple things that can be really useful is this. So when a person is on disability, one of the best ways to understand how much they're earning is to do a formula to get a guesstimate of their wages. And the reason I say a guesstimate or a best estimate is you still have to turn things into Social Security, but you can start to understand what a person's income truly looks like. So the way you do it is you would take how many hours a person works, how much they make an hour, and times about 4.33. And the 4.33 is how many weeks in a month most people work. So other than the month of February, and it's not that way every year, but other than the month of February, we don't have any months that are exactly 4 weeks long. So generally, if you times about 4.33, most of us work four full weeks in a month, and then a couple, 3 days of a fifth week. So if you put in how much a person works times how many hours, how much person is paid, their hourly wage, times how many hours they work generally in a month. And if someone works maybe a variety, you may want to air a little high so you know where you're at. And then 4.33. So the example I have on the screen is if a person is making $10 an hour and they work 30 hours a week times 4.33 hours, that's 4.33 weeks in a month. That gives us basically just under $1,300. And that's a gross estimate. And that gives you an idea of what that person is most likely earning when they are working in the eyes of Social Security. Again, you're still going to have to turn in pay stubs, but this will give you an idea of knowing if a person needs a subsidy and if a subsidy will actually benefit them. The last little hint that I have for you is this, especially on the disability program, it's a good idea that when a person is reporting their wages to Social Security, to send in a monthly calendar. And just if you would like, I've got a template calendar that I can send out to you to send to anyone else, that if they want to start tracking hours on a calendar to submit those to Social Security, it also helps Social Security just know when a person really worked. Again, if you're going to look at a subsidy or a special condition, the first step is understanding how much a person is earning, and then understanding then if a subsidy or a special condition will benefit them. All right. And then the last piece before I actually get into the subsidy and special conditions in details is understanding the different work incentives. I'm not going to go through these, but some work incentives that individuals have apply to folks that are on disability. Some work incentives that exist apply to folks that are on SSI, and then some actually apply to both populations. So when looking at subsidies and special conditions, those only apply to individuals who receive disability benefits. So that's that Title II benefit that I mentioned earlier. So if a person is on SSI, unfortunately, a subsidy or special condition does not apply to them. But if they're on disability, they can absolutely utilize a subsidy or a special condition. So now let's actually talk about what they are. So a subsidy or a special condition is the value that's given to natural and or paid supports received on the job due to a person's disability. So we all know that oftentimes individuals who have a disability need additional supports and services to maintain their job. And in actuality, we all get extra help at work. We may not call it a subsidy, we may not call it a special condition, we may not call it an accommodation, but every single one of us that's employed and has stayed employed, we get a little help from our friends, whether it's our coworkers, whether it's our family, someone is usually there helping us. Okay, no one gets through this alone. So a subsidy or a special condition just gives value to that, which impacts how Social Security counts their wages. Social Security deducts the value of the subsidies or the special conditions from someone's monthly reported earnings. And another way of looking at a subsidy or a special condition is that participants, customers, the person served, whatever vocabulary you want to use, they earn less than 100% of their wages. And I put earn in quotation marks because it almost sounds like the person isn't really earning their money, and that's not it at all. The idea of it is, though, that again, a person is receiving additional assistance on the job, and we need to give value and honor to those things that help a person maintain employment. And a big part of that is if a person receives any type of additional assistance, and that can be from a paid support or a natural support, but it happens on the job to help the person maintain their employment. And the big thing, because I get this question a lot when we talk about these, is that it does not change. And so I have the not in bold. It does not change what an individual is paid. So applying for and being granted a subsidy or a special condition does not change how much the individual is paid one red cent. It does not impact their job. Again, it is just letting Social Security know that these things exist and giving a value to them so Social Security can accurately count a person's earnings. So let's talk a little bit about the disability program and how a subsidy or a special condition can be beneficial for an individual. First off is understanding that disability is an all or nothing program. You may have heard this before. So when a person is on disability and they're working, they are always in one of two situations. The person's either getting 100% of their SSDI benefit, let's say it's $1,000. They are getting their $1,000 in a disability benefit plus whatever they're making from their job, or they are only getting their wages from their employment. That is how disability works when you're working. You either get disability plus your wages or only your wages. What makes the difference, or what tells us if a person is going to get their wages plus their disability benefit or only the wages, is this: substantial gainful activity, or I like to call it the magic number. All right. So substantial gainful activity, or SGA, is a big term in the world of Social Security. It matters when you're first applying for benefits, and it matters when you're looking at maintaining your benefits. So Social Security calls substantial gainful activity the performance of significant physical and or mental activities in work for pay or profit. That's a long-winded way of saying this. Social Security or substantial gainful activity is working enough to support yourself. Or I say it again, substantial gainful activity, at least in the eyes of Social Security, is that a person is working enough to support themselves. I've been doing benefits planning work for a long time, and I will get this question or this statement a few times a year. Social Security says I'm 100% permanently disabled. And while I don't mean to be disrespectful, my response is no, they didn't. And the reason that I say that is that's really not Social Security language. That's workers' comp language. And you'd have folks that have been on VA benefits. Those types of ratings exist in those worlds. What Social Security really looks at is, can a person reasonably expected to perform substantial gainful activity or not? Or can that person work enough to support themselves? So that's the concept. And every year, Social Security gives that concept a dollar amount. And there's $2 amounts for that concept. One is if you're non-blind, and one if you meet statutory blindness. So if a person is not considered statutorily blind, the limit, I really dislike that term, but I know it's fairly common that people say, oh, what's the limit that Social Security says I can make? So again, it's in quotation marks. That amount of money is $13.10 per month if the person is not blind. If the person is blind, then the dollar amount is $2,190 per month. By the way, while I put limit in this PowerPoint, please do not look at that as a glass ceiling. Please do not look at that as something that a person can't go over, because they absolutely can. And that's one of the reasons why subsidies and special conditions exist. But it is a guideline that people may want to be aware of. But I really hope no one sees that 1310 or that 2190 amount and go, I can never make a cent beyond that. That actually is not true. And that's why you always want to work with a benefits planner, because there are lots of work incentives that allow a person to make well above these two numbers and maintain their benefits. So looking at the Social Security Disability Program, one of the things that I'm just going to chat with quickly before we get more into how subsidies and special conditions works is the different phases when a person is working on disability. So when a person has returned to work, they're on the disability program, the first phase of return to work is called the trial work period, of the TWP. What this means is that when a person first returns to work after getting on benefits, it doesn't matter if they go back to work a year after getting on benefits or 20 years after getting on benefit. When a person returns to work after getting on benefits, they start off in the trial work period. And when they're in the trial work period, there is no amount of money that they can make that will impact their Social Security benefits. So I'll say that again, they can make as much money as they want to, they can make as much money as they can, and nothing will happen to their disability benefit. During the trial work period, what does happen is a person can use up their trial work period. So for 2021, what triggers the use of a trial work month, and a person gets 9 trial work months, and they do not have to be consecutive, is $940. So if a person makes $940 or more, then they use up one of their trial work period months. If they're not making at least $940, they're not using up a trial work period month. While I don't want people to think, oh, I need to never make $940 or hit the trial work period. No, it just means that until those trial work period months are used up, a person can make as much money as they want to, as much money as they can, and nothing will happen to their benefits. It's not until after you've exhausted your trial work period that something may happen to your benefits by working. And that's when you enter the extended period of eligibility. So some of you may be wondering, well, how do we know if a person's in their trial work period, they're in their EPE, or how many of their months have they used? This is where I get to say the commercial, this is where you want to talk to a benefits planner. Benefit planners have the ability to request what are called benefits planning queries, or BPQIs. I always have a hard time saying that. They're able to request a report from Social Security that says how many of the trial work periods or where in the return to work process a person is. And one of the primary reasons why you want to work with a benefits planner on getting this type of information is really twofold. Number one, if you're not a benefits planner, you'll get these reports, and I'm sure you're all very intelligent people, but they're not always written in the most clear language. And sometimes there may be a couple things that are inaccurate that a benefits planner will notice and can ask some clarifying questions. The other part of it is this, especially if an individual tries to request their benefits planning query, oftentimes Social Security will charge the individual. If a benefits planner requests the exact same report, we typically get it for free. So again, another way of accessing this information in an effective way may be working with a benefits planner. So with that being said, when do we need to look at a subsidy or a special condition? And I'll kind of explain how these work out here in just a moment. Number one is that you should really look at establishing a subsidy or a special condition when a person has used all or almost all of their trial work period months. Again, one thing that you'll want to do is work with the benefits planner to figure out how far into a person's trial work period a person is, or if they've already used their trial work period. If you have gotten letters from Social Security and Social Security sent you a letter saying Jack or Jill has used their trial work period, that's fantastic, you know, or it may say they've used these many months, but again, you really want to connect with the benefits planner. The other part of it is, are they working a job that is near or above substantial gainful activity? They're the numbers again, the 1310 and the 2190. Though the numbers for next year for 2020 should be coming out this October. So those numbers will either be the same or go up. They never go down. But for right now, the numbers are 1310 if you're non-blind, 2190 if you experience blindness. So are they working a job that's getting close to those dollar amounts? Do they receive extra help on the job? So I said earlier, I believe everybody gets extra help on the job. I know I get extra help on my job just because, again, we all succeed or fail together. But you just want to verify that the person is getting some assistance that lend itself to a subsidy or a special condition. We'll talk about what types of things count as subsidies in a special condition here in a moment. And then figure out the value. Does the extra help, would it impact substantial gainful activity? If they're making over the 1310 or over the 2190, if they do get extra help and we work on the value of that extra help, will it actually impact? Will it actually benefit the person? And we'll talk about here in just a second how we can do some of these steps. So what is a subsidy versus a special condition? So a subsidy is assistance, and I put is the assistance or any type of modification for the job that is based on the disability that the person experiences. Some common examples would be increased supervision or training from coworkers or management, a supervisor, reduced tasks or job customization. So if maybe we reduce some things that a person does as part of an accommodation, there's any type of job sharing. If there's anything that really modifies the job or a person maybe has a reduced productivity, those things are considered subsidies. And we'll talk about here in a second, how do we give value to what that subsidy is? But that's really what the subsidy is the additional assistance that a person gets on the job from the employer, again, from a supervisor, from a coworker, from someone on the job site that actually that is assisting them with activities, or if they receive any modifications in the job. So let's say a job typically has 10 essential duties that a person does, but because of a disability, may we have them do 8 of them. That is a good sign that there is some type of a subsidy going on because we made some type of accommodation or modification in the job duties, and now we need to figure out the value of that modification or accommodation. The other side of this is a special condition. And this really goes down to professional or paid supports that really help a person maintain employment. The big part about this is that it does not need to be paid for by the individual. They can still get credit for it, if you will, even if someone else is paying. And the most common example of a special condition is job coaching. So if a person receives has job coaching, then they actually have a special condition. And again, we just have to figure out the value of the special condition and see if it will benefit them if they're in a position where they're making near or above substantial gainful activity. So how do we determine the value of a subsidy or a special condition? First off, it is ultimately determined by the Social Security Administration. So what we do when applying for a subsidy or a special condition is that you provide the information to the Social Security Administration, but they make the ultimate decision on these work incentives. So for a subsidy, one of the first things that they do is use the information that's provided by the employer. And that's one of the cool things about subsidies. One of the reasons I like them so much is that really Social Security, more often than not, defaults to what the employer says, defaults to how the employer values the subsidy. Social Security tends to go, if you're going to hire Brian and you're pleased with Brian's performance and you're willing to invest this additional assistance into maintaining Brian, and you tell us that this is what the value of it is, for the most part, they're going to trust what that employer says. It's their business. So they know their business better than anyone else. So that's one of the things that I really like about these, is that generally Social Security is going to take what the employer says and put a lot of stock into it. It's always helpful to talk about a job description and what the duties are. What type of assistance does the person receive? Again, do they have certain parts of their job that they don't do because of the disability? Do they get extra assistance from a coworker? Does the supervisor provide them with extra supervision? Do they work at a slower pace or less productivity than maybe someone else in the same job, but that still has value? The employer does give value to what the assistance is, and I've seen it be done both ways. I've seen employers give a hard number and say that this assistance that we give Jack or Jill in a given month is $300. I've also seen them do a percentage. I personally like the percentage better because the percentage will move if a person, let's say a person's part-time, and one month they work more hours than another month. When you do the percentage, that number will just move with the person's earnings. When you set a hard dollar amount, it's a hard dollar amount. But either one is fine, and I've seen both accepted by the Social Security Administration. The more detail, the better. The more detail, the better. So going into the assistance that the person gets is really useful in helping Social Security make these determinations. Now, an employer may need to lean on those of us in this world for more information. So they may ask, verbiage, how do we say this? How do I describe this? They may want another set of eyes to identify the assistance. All those things are fine and great. And it's really a great teaming opportunity with the employer, but more detail, the better. And then lastly is typically it's only done once. And what I mean that, which again is why I tend to like subsidies a lot, is that once a subsidy is granted, then it typically stays that way. I don't see them come up for renewal or need to be done again very often. So typically if a person, let's say, is working at the local hospital and they get a subsidy, that subsidy will attach to that job until that person goes to another employer. Technically, they should redo the subsidy if a person gets a different position with the same employer, but more often than not, if they're still employed with the same employer, oftentimes that subsidy stays the same. I've got an example here on the next slide of how we apply a subsidy, but those are the first things. Is subsidies are really employer driven. So getting information from the employer, helping them understand the assistance that a person gets, and getting that into plain language and black and white for the Social Security Administration is really, really what makes a subsidy go. On the other hand, you've got the special conditions. So again, more often than not, when we're talking about special conditions, we're talking about job coaching. So again, it's a paid service, and whether that's paid for by Voc Rehab or the MCOs, it doesn't matter. But if they get providing job coaching. Now, if a person is for some reason paying for their own job coaching, their own supports on the job, they can count those as a work incentive to impact their benefits. The amount of money Social Security counts as well, but that is not a subsidy. That actually is what's called an impairment related work expense. So if Jess is my job coach and Voc Rehab is paying for her time, then we are going to talk about how we give value to that. But if I'm in a position that I'm actually paying for Jess to provide my job coaching services out of my own pocket, all I need to do at that point is just send in proof of what I paid her, and that is considered an impairment-related work expense. I know it's not a lot of individuals probably across the state that do pay for their own assistance, such as job coaching, but there are some. And if there are individuals that are in that position that it's being private paid for, then that is something that you can also claim, but it wouldn't be a special condition. It would be an impairment-related work expense. And if anyone has questions about that, feel free to ask. Along with the special condition, though, you want to establish the monthly value of the coaching. And really, that's how many hours they're served in a given month. And the cost of the coaching is based on the rate of the employee, not the job coach. So again, we're going to make Jess my job coach for a second. And I work a job that I make, let's say, $10 an hour. And Jess as my job coach makes $15 an hour. The value of the job coaching she provides me throughout the month is valued at $10 an hour. That's what I make versus what she's actually paid by her employer. So sometimes it's a little tricky of understanding it, But the value of the job coaching is what the employee, the person served, makes per hour, not what the job coach makes per hour. So again, I know that's going to be a little tricky, but that is the rules of how it's supposed to be calculated. And then with things such as a special condition, you want to submit this every month when you submit a person's pay stubs. By the way, and my guess is you probably have had some information about this, but when a person is working and you're applying for different work incentives, one of the best ways to not get credit for everything is to send things in separately. So if a person, let's say, gets paid every week and you send in their pay stubs weekly, that's a really good way that things, unfortunately, Social Security doesn't keep things together. If we send in pay stubs on Monday, but then we send in information on the work incentives on Tuesday, that may not always work out where everything is captured. So it's always a good idea to report everything at one time to the Social Security Administration. And then finally, we're going to do some math, and that's what we're going to do next, is you do the math to really see if the subsidy, if the special condition are going to be beneficial for the individual. So before we jump into that, are there any questions about what I've covered so far? I've covered a lot kind of quickly, so I want to take a pause here, see if there's any questions about what we've talked about so far. All right. So let's talk about Zoe. So Zoe is someone that we're going to have an example of a subsidy, okay? So Zoe works at the local medical clinic and she experiences cerebral palsy and she has seizures. She also earns $1,500 a month from her job. So here are just some details regarding Zoe's subsidy. So Zoe has some reduced tasks due to some mobility barriers due to her cerebral palsy. She also works at a slightly slower pace than her coworkers in similar positions. And due to her seizure disorders, her employer does some additional supervision just to keep an eye on her due to the seizure disorders in case something occurs. All these, and again, these are just one sentences here, obviously, but all these show and demonstrate the additional support that she's getting on the job site from the employer based on her disabilities. So the employer provides details related to those subsidy items and say that Zoe's subsidy is valued about 15% per month. Now, let me make sure I'm clear here, because I will say sometimes when employers have written this, they've written it backwards and we've had to talk it through. This again is why you want to work with the benefits planner. We've had to talk it through and go, oh, no, we did it backwards. So when an employer is discussing the subsidy, they're discussing the value of how much assistance that the individual gets. So if Zoe gets assistance of 15%, what that really is saying is Zoe, again, in quotation marks, because I don't want to sound dismissive, Zoe earns, again, in quotation marks, 85% of her wages because she gets a 15% subsidy from all the assistance that the employer is giving her. I hope that makes sense. So when this information is submitted to Social Security and they approve the subsidy, here's what Social Security does every time Zoe turns in her pay stubs. So they will say, and again, let's assume she is making $1,500 a month. What they're going to say is Zoe's countable income is not the $1,500 a month, which is actually above substantial gainful activity. It's above the 1310. What it does say is her countable income is $1,275. And the way that we got to that number is 85% of $1,500, or $1,500 times 0.85 comes to $1,275. That is under substantial gainful activity, which means that while Zoe is still paid $1,500 a month from her job, Social Security only counts 1,275 of it, which means she maintains not only her pay from the employer, and the pay does not change 1 cent, but she also maintains her disability benefits. So Zoe's in a much stronger financial situation due to that. So that is how a subsidy is applied. So when once a subsidy is granted, when an individual turns in their wages every month, if they do a hard dollar amount, Social Security subtracts it. If they do a percentage, Social Security times it by that percentage, and that becomes the new countable income in the eyes of Social Security for the person. Questions about the Zoe example? I'm sorry, D. Is the amount earned reported as gross or net income? The amount earned is always reported as gross unless a person is self-employed. Social Security always looks at the gross unless an individual is self-employed. If they're self-employed, they count a lesser amount. But for folks that are working wage employment, which most of us do, it is always the gross amount. So Brooklyn, let's the example of a special condition. So Brooklyn works at a bookstore and she experiences a brain injury and earns $14.40 per month. You may hear my cat. Brooklyn works at a bookstore and she earns $1,440 in a given month and she has a brain injury. So here are her special condition details. So she gets about 30 hours of job coaching per month and Brooklyn earns $12 per hour. So the value of the job coaching, and again, when it's something like job coaching special condition, it's really straightforward. So the value for job coaching is $360. And the way that we get to 360 is $12 an hour, which is what Brooklyn earns, even if her job coach makes more than that. She makes Brooklyn's job, pays her $12 an hour, and we times about 30 hours of job coaching that a person receives. And then when that again is sent into Social Security, once they accept it, what they would do is this. So again, let's play out the idea that Brooklyn continues to make the $1,440. So it's really simple. They're going to subtract the $360, which is the value for job coaching, from the $1,440, which is what she earned. Again, $1,440 is more than $1,310. So she is actually making more than substantial gainful activity. But what Social Security counts is $1,080. So again, $1,080, which is under $1,310. So just like with the example with Zoe, Brooklyn not only maintains her SSDI benefits, but she also maintains every cent of her money from her job. So again, she's in a much better financial situation than she would have been otherwise. And again, it gives value to the job coaching assistance that she receives. So with all this information on subsidies and special conditions, some of you may be wondering, how do you start the process? And the way you start the process, number one, is you need to assemble your team. And the reason I say that, number one, I'm a big fan of the Avengers, so anything I get to talk about assembling, I like that. But you really want to put together a team to make sure you have all your ducks in a row before you start this process. So number one is you want to contact a benefits planner, who again can look at the idea of a subsidy or a special condition and make sure that you're capturing everything. Make sure that you involve partners who may have to provide some additional information. First and foremost are the employers. All right. Some employers are actually familiar with this and may have done this before. Some of this is making completely out of left field and they're not sure what this is. They want to make sure everything is okay. Again, it's where a benefits planner can really help them understand this is absolutely fine. It's allowable. And this will help an individual maintain their benefits. I did have one employer when we were discussing this, his response was, because he really valued this employee, he goes, so he can work more hours. And I go, yes, he can. Because again, with things like a subsidy or a special condition, if a person has been concerned about working over the 1310 or working over the 2190, things such as subsidies and special conditions allow them to earn more money. So a lot of time employers feel this is a good thing because they have a valuable employee that unfortunately may have been telling them there's a cap on how much they can work. And again, those numbers, that 1310 and that 2190, those substantial gainful activity numbers are not written in stone, but still many individuals are concerned. And so employers will we all know, especially in the face of the pandemic, employers have lots of job openings. They need people. And this is a way to really extend out a person's schedule, let them work more, make more money, which is a win-win on both sides. But also job coaches, pays, guardians, anyone else will need to help make sure these things are reported to Social Security and are tracked. Make sure that the subsidy and special conditions exist, and again, will be beneficial. So if we go back to Brooklyn, if we looked at her and counted her job coaching, if her job coaching was not going to bring her earnings under the 1310, then the subsidy alone, the special condition loan would not be sufficient. With Zoe, if her subsidy would not have brought the $1,500 under the 1310, then the subsidy would not be sufficient. So as much as you want to start, if there's something that you think would be beneficial to anyone that you're working with, that you're serving, that you may know, you also want to again start to play with the numbers, do the math, and see if this is sufficient. I work with a family about a year and a half ago where a gentleman came in with his wife, and he's on disability, and she wanted to apply him for a subsidy. She had read something online and went to a presentation, and she wanted to apply him for the subsidy. When we contacted his employer, the employer raved about what a great employee he is, and when looked at the assistance that they gave him based on how much money he was making, while they did give him a little bit of assistance with what they felt was accurate for his level of subsidy, it was not going to bring his earnings down under substantial gainful activity. So we discussed with the employer, we got some information, we went down the road a little bit, but at the end, a subsidy alone was not going to be sufficient to bring his wages under the substantial gainful activity amount for that year, just because he didn't get enough assistance based on the employer's standpoint. So it's always a good idea to, again, talk to those employers and get an idea of how much assistance that they can attest that the person gets, the value of the subsidy that they feel is accurate. And then the other pieces that you very well may need to blend in other work incentives. So the great thing about work incentives is you can utilize as many as are accurate to the individual. So while a subsidy or a special condition alone may be able to bring a person's earnings down, it very well may not. But then there are additional things such as those impairment-related work expenses and other items that you can pair. And again, the way you're going to know how to kind of navigate all those moving parts is, again, to touch base with the benefits planner. And then once you start having these initial things gathered, and you've had discussed with the employer and or job coaching, and you started to really move down the line, is you need to initiate it with Social Security. So one of the first things you can do is just contact the Social Security Administration. That is their general 800 number. All the local offices in the state of Iowa have specific numbers as well, but that is the catch-all number for Social Security. You can ask what to do what's called a work review, which is they will send out a report called a work activity report. And if you ever want to see one, Google SSA 821. That's the form. That's one of the cool things that Social Security does is you can pretty much see all their forms online. So if you're curious what a work activity report looks like, if you Google SSA 821, you can see what it looks like. Page 5 of that work activity report is talking about subsidies and special conditions. It'll talk about extra help. Do you get extra help from supervisors? Do you have reduced job title, just not job titles, job duties, anything to do with pace or productivity? It begins to ask a lot of those questions, which can trigger Social Security to understand that a subsidy or a special condition exists. And then you can begin to provide information to Social Security to establish the value of those subsidies or those special conditions. And once those are approved, then again, they typically stay with the individual unless there's some type of job change. So with that, are there questions regarding what I discussed today? Well, I have appreciated your time today and letting me jump on. If anyone has any questions about anything to do with workforce services, benefits planning, ticket to work, or anything we do out of our offices, feel free to give me a call or send me an email. Again, my name is Brian Dennis. I've appreciated the time today, and honestly, everyone have a great rest of your week.
Brian, thank you so much. You were the absolute best, and always break all that stuff down so well. I think that's why there's no questions, right? It's clear as a bell. If there isn't any further questions or discussion for today, I'll just encourage you to please complete the evaluation or the survey of today's webinar. We always appreciate your feedback and find it super helpful. If you have additional ideas for what you would like to see or hear for next year's Community of Practice, that would be great and much appreciated, as we are soon to wrap up here in September. Checking on that date for us. I should have pulled that ahead of time. Silly of me. September 21st, we are back with Brana Craze from CISL, the Center for Independent Living. Brana is going to come talk to us about the employment planning meeting, which I'm really excited about. Brana is amazing at that, an expert at that. And so I'm really excited for her to come and talk to us a little bit about what that could look like, and some tips and tricks and best practices around implementing the employment planning meeting, if you will. I'm so really excited to have that. So come back September 21st as we wrap up, somehow wrap up the 2021 year Community of Practice. I'll be sure to send out the registration for that, along with the recording and materials for today. I think Brian was going to share with us a reporting template or that tracking calendar. So we'll be sure to share that back. So
Absolutely. I will send that out right after the meeting.
Perfect. Thanks, Brian. So I think we'll let you go. Enjoy the rest of your day. Enjoy the rest of your week, and we'll see you in September. Brian, thanks again so much.